Okay, welcome back to the channel, everyone. Today I want to talk to you about something that's extremely important, especially if you are a supply and demand trader, okay? Now, we know that's aggressive buying and selling, and there's a whole picture that must come into play when trying to locate or find high probability zones, which pretty much put us into a great setup, right? Now, there is one critical element or component that's extremely important for all traders to really focus in on when looking at their charts, okay? And if you're a beginner trader, you're not going to see this. Most times, people that are just starting out, you know, all we see is the movement up and down, or moving sideways, right? Okay, but there's a bigger picture, something that you really need to understand that is right there in front of your face, right there on the chart, okay? All right, and it's a critical component, like I said, to supply and demand trading. I'm going to give you that little secret right now, okay? I'm going to whisper it. Imbalances. You got that? Did you hear that? Imbalances. Imbalances, guys. You must be able to identify what I like to call gaps, all right? A lot of traders call them imbalances, or we call them, like I said, gaps. They are crucial to trading supply and demand, okay? I've talked about this topic and hinted on it and covered it and in any kind of way to kind of beat it to death in many videos. You have to be able to see and locate areas of imbalances. I'm not just talking about, you can see them, you'll be able to identify them anywhere on the chart in between, you know, one candle and the next candle, okay, either up or down. So the market's moving higher, we got one candle gapping up above another candle, leaving an imbalance there, or gapping down, vice versa. But what we want to do as supply and demand traders is to be able to locate, identify an imbalance back at a supply zone. You guys heard me talk about this time and time again. Why? I'll give you 5 seconds to answer that question. 5, 4, 3, 2, 1. All right. Why? Because it sets us up for a high probability trade. Okay? All right? I've said this time and time again. If the market comes back and tests, which appears to be an aggressive area, okay, where the market is pushing higher, and it's a demand zone, and I look at that zone and I see that there's no imbalance or gap resting at that demand zone, that is not a high probability zone. It's low probability. So I primarily am not going to be interested in 99.9% of my trades, not interested in taking a trade at that area. Why? Because to me, most orders have already been filled. You have to pay close attention to price action. It's as simply as kind of paying attention and looking at institutional order flow or order flow on your charts, okay? All right? And the imbalances, they tell a story, guys, all right? So if price is moving fast to the upside, okay? Aggressive area coming out of the swing, we got to break a structure, leaving behind a demand zone, and we got to gap back up the zone. What does that tell me as a supply and demand trader? It tells me that there are possible, very possible orders that are still resting there at that demand zone where that imbalance rests at that didn't get filled. So as a retail trader, I want to be in position to take that opportunity when price gets back to that zone, okay? Hopefully that makes sense. I'm going to show you here on the chart, okay, what I'm talking about, all right? An area to where a zone that's low probability versus one that is high probability, okay? And again, what makes it high probability and low probability is the imbalance. Let that word register, sink in, you know, embed in your brain that imbalances equate to unfilled orders, possibly resting in the market. Understand that. Because we as traders, I always say this, we want to trade in the direction of the higher beings or the powers to be, banks, big institutions. We want to trade with them. You don't want to try to take a trade against them, okay? And one of the biggest edges, like I said, that's going to help you, you know, kind of put you in the right direction is if you got a powerful zone, lots of aggressive buying, or it could be selling, supply zone, and you got an imbalance resting there. That's going to raise the probability of you getting into a higher probability trade setup. So I'm going to show you an example of what I'm talking about. One where there's a zone where there's no imbalance set, and one where there's a zone where there's an imbalance set. Let's talk about that. Okay, you see this green line right here? Market was coming down today. Okay, now this green line indicates, I'm gonna go back on the chart to a date to where there was a break of structure and there was a demand zone. Okay, and it's still an area of demand, but it's just a area of demand which I classify as low probability. I'm going to show you why. So let's go back on the charts. Today's the August the 2nd, right? So we're going to go back. Excuse me, go back. Okay, right here. July the 18th. You see this right here, price pushed higher, pull back, and broke higher. This break right here above 65.5 is what I classify as a break of structure, okay? Now, this area right here is a demand zone. I'm going to go ahead and mark off the demand zone for you so you can see it. Give me 1 second here. All right. Let's see here. This area right here. Okay? That's a demand zone. All right? Now, the reason why it is a low probability zone is because there is not an imbalance resting at this zone right here. Okay? All right. I'm going to show it to you. Blow it up for you. All right. All right. Push up. Pull back. Break higher. Aggressive buying in this area right here. This is off my 12 range chart. This is my execution or my anchor chart. Okay, the ones I take most of my entries off of. All right. So look, remember what I was just saying at the beginning of this video? Candle pushing up, and then you get the next candle or break above, and it leaves a gap in between two candles. All right. So take a look. Coming out of this swing to the upside here, bullish candle. Next candle breaks higher. Okay. All right. So this candle right here took out this candle here to the upside. All right, when it did that, it left a gap, okay, from here pretty much to this area here. Now, this next candle that came up, this little, I'm going to call it like a little hammer candle here to the upside. This candle right here, it came back and filled the gap in between these two candles right here. There's no imbalance resting now, okay? So as price continue breaking higher, and then it comes back to this zone, all right, like it did today, there's no imbalance resting right there. And because there is no imbalance resting right there, this makes this demand zone, what I'm looking at right here, low probability setup for me. I'm not taking that trade, all right? I'm not saying it can't bounce or reject, but lots of times what happens is at a low probability area like this where there's no imbalance resting at, the market gets back to the area, okay, or comes back and retests that zone, all right? The market makers want to reject off that price area to get retail traders to think that the price is going to reject the zone and boom, push up higher, right? All they do is they fake you out, push the market up a little bit, people start buying, okay? They fold the market in the other direction and stop traders out, okay? They come down and hit sell stops, okay? See all this right here? Sell stops. They collected on that, okay? So if you went long when they faked you out here today, when price got back to this low probability demand zone, guess what? Market bounced, pushed up, boom, they collapsed the market to take out traders and collect on this area of liquidity. So again, this is a low probability zone. I'm not interested in that area, okay? I saw a few traders taking this type trade today on the Discord, and I did send a message and said, hey, this is not pay close attention. This is not a high probability zone, you know, because again, this demand area here has already been tested where it didn't leave an imbalance. Okay, guys. So look for areas or zones that are supply and demand zones where you have an imbalance or gap at. That's going to increase your probability of a trade. So let's take a look at an example of what I'm talking about where we have an imbalance resting at. All right, so I'll mark this off. I showed it a couple of days ago in a video, but see this area here? This is a supply zone. Okay, why is it a supply zone? Let's just quickly talk about that. I'm not going to go into detail. That's not the video for it. But supply just means simply aggressive selling to the downside. But what makes it a supply zone as well is because we got a nice breaker structure where price pushed down here, pulled back, and broke lower right here. Okay, and this is a supply zone within this area that broke structure to the downside. Okay, so we got this area here, aggressive selling right here, makes it a supply zone. But again, we're talking about imbalances here. That is the key thing we're talking about, the secret part of this video here that all traders really need to really understand and grasp, okay? Because look, you can trade a naked chart and don't have to have all the bells and whistles of all those indicators that so many people think they need. That just clutters and fogs up or clouds your trading. Trust me, I've been there, okay? Started my career or venture or journey into trading. I had so much stuff on my charts, and I thought I needed it all. I was waiting for X, Y, and Z to make crosses, and it hindered my trade, my trading more than it actually helped me. Okay, so it wasn't until I actually removed everything, started from scratch, naked charts, clean charts, is when my win rates really started to become better and increase. All right, so we got the breaker structure here to the downside, right? All right, and once price breaks structure to the downside, it doesn't immediately come back to the demand zone, right? Okay, so it takes it a while. You know, it doesn't move back or retrace back to that zone until the very next day, towards almost midday, okay, on the 28th. All right, but we tapped into the zone. Look, I'm gonna blow it up so you can see what I'm talking about when it comes to imbalances. Now, see, this is a breaker structure, aggressive selling, and right here is where we have the gap at. You see where we have this candle to the downside, okay? Then the very next candle takes out this candle to the downside, okay? So we have a gap from the break of this candle here that was taken out by this candle, and then look at the third candle for the pretty much to give you the area of the gap, okay? So the gap lies in between once the candles are broken to the downside. I'm gonna use this arrow line from right here, the bottom of this red candle here, and the bottom of this very next red candle here, okay? All right, so I'll move this box up here because maybe it's standing in the way so you guys can't really see what I'm talking about. All right, so there we go. All right, this candle here, the red candle, after we have this last bullish up candle, the very next candle that comes down and closes red, okay? All right, is taken out by this next red candle to the downside. So when this second red candle forms to the downside, when it closes, we have the gap in between the bottom end of this last candle here, the second candle that closed to the downside, and our first candle that was taken out, the first bullish candle, okay, to the downside by this one right here. Leaving a gap right there, okay? That's probably, let's see, 13 and a half. Excuse me, I'm sorry. About a point and a half. No, 13 and a half. I'm sorry, guys. 13 and a half. It's about 2-point gap right there, okay? But needless to say, it's a gap. I don't care if it was a 1-tick gap or 2-tick gap. It's still a gap or an imbalance, all right? That is the key, the component in what you really want to focus in on. Imbalances are powerful, okay? They are an extremely important part to trading, all right? And you have to understand what's taking place, understand what's going on when you see the imbalance. Kind of start being logical in the mindset of trying to just take it all in, all right? Supply zone, boom, breaker structure, aggressive selling with an imbalance. This is my supply zone right here. I had the gap in between these two lines right here. The first candle, red coming down, taken out by the next candle. Once it closes, that second candle closes. So the bottom end of the first candle that closes and the bottom end of the second candle that closes, okay? Mark the area or the gap in between there. Okay, so basically, I'm going to remove this again so you can see it. Okay? First candle that closes red at the demand zone, okay? This candle here is taken out by the second candle, all right? The bottom end of this red candle that closes, the second red candle that closes the bottom end of that red candle, and then you look to see, did price come back and fill this area in? Not yet. See? The third candle that comes down, closes. Fourth candle that comes down, closes. Excuse me. And then you get a retracement, but it didn't fill in the area in between this candle and this candle here. Okay? So there is a gap or imbalance in between these two candles that close right here. Okay? All right? And that gap does not get filled until, we're going to bring the chart back together right here, until we get the retracement back up to this area here. Now the gap is filled once we get back into the supply zone, okay? We get back up here, retrace back into it. Look, we're in the zone. We feel the imbalance right there, and boom. Once you get the imbalance filled and you have the price tapping back into the supply zone, look for a rejection at that zone. Again, this video is to really just to identify and let you know if you are missing the key component or a crucial, important part when it comes to your trading. Pay close attention to the imbalances, guys. Please, 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 please. It is very important, okay? But that's all I'm going to leave you with, and I want to share with you today because a lot of you may be missing that part, and it probably is going to help enhance your trading as well. But look, do me a favor. If you're a first-time viewer here on the channel and you're just a first-time watching one of the videos, please take the time to go ahead and sub. If you found the value in what I'm trying to say in this video extremely important, trust me when I say this, it will help improve your trading if you just take the time to be patient and mark your zones and look for those key imbalance or gap areas within your zones, okay? Please drop a like on the video. Please subscribe to the channel by simply clicking on the sub button or subscribe button. Make sure to turn your post notifications on by clicking on the bell. That's going to ensure you never miss one of the uploads here on the channel. If you're interested in joining our Discord community, the link is down in the description portion of this video as well. Click on the link. You can invite yourself in, all right? Also, people are still asking how they can become or join the Elite membership. It's $6.99 a month. Not a day, not a week, not a year. It is a month, okay? A month, $6.99. So it's not $699. But look, I know a lot of you guys spend more than that on the price of a cup of coffee. And if you're really serious about understanding and wanting to trade the correct way, come over to the Discord community. Ask some of the fellow members on the Discord community. You know, you can go to the general chat section, type in, hey, have you guys learned a lot of information? Do you find the content on this channel valuable? Are you elite members, and how has the elite membership helped you out for $6.99 a month? I'll let them speak, okay? I'm not going to do the talking. I'm not going to toot my own horn. I'm just telling you the fact is that I believe in how I trade, okay? I stick to the same strategy, and it works for me daily. Not every strategy is going to work 100%. The key to trading is risk management, trade management, knowing when to get out if a trade does not work out, to protect your capital so you can get back in, make up that small loss, and make up the difference and really make some good capital or make some great income, okay? So if you're interested in becoming an elite member, you'll find the link to the elite membership down in the description portion of the video as well, or you can click on the join link or button here on the video, okay? It's going to bring up two tiers. You can select the elite membership, $6.99 a month. What you get with that is the trade breakdowns when I post those videos to the channel. Basically, it's as if, like I said before, you're sitting next to me or virtually, and I'm walking you through my in-depth thought process, okay, in detail of what I was thinking about leading up to a trade, why I took that trade, just a full-on discussion, guys, about my trading, okay? And I post my entries over on the Discord community so people can see as well, all right? As well as other traders that trade or part of the community. On the trading floor, you'll find a channel called the Trading Floor. That's where we come together and share our trades, all right? We post screenshots of our entries. So, you know, come over to the Discord as well. But if you're interested in becoming an elite member, just simply click on the join button, or you can find that link down in the description portion of the video as well. And sign up, okay? $6.99. You know, if you really want to maybe turn your trading around and maybe pick up some great information and some tips, you know, understand the concepts of how I actually trade and the strategy I use, it's up to you. But I'm telling you, it's helped many, okay? So other than that, guys, that's all I have for you today in this video. I thank each and every one of you for watching today's video, for becoming part of the Discord community, and for everyone who is a current elite member, thank you for doing so. Basically, what you're doing is supporting my efforts as a content creator and making this great content, as well as pushing everyone and just really wanting to be inspired to see people, you know, succeed. All right, that's all I have for you guys in this video. Take care. I'll see you in the next one. If you're trading today, like I always say, be safe in the markets.